Have I gone absolutely crazy? Is Main Street Capital on the way out? Is there a serious problem with this company? I want to explain today why I took another look at my Main Street Capital holdings and what I have decided to do with it, and perhaps more importantly, why. So I'm going to look at MAIN and why I've swapped it out for Fidus, FDUS. Let's get into it. I ran what is known as a PCA visualization, a principal components analysis. Now, I didn't do this very rigorously or thoroughly. I was mostly just throwing some of the data I had there. It wasn't all of the data, but I just wanted to see how it would shake out and how it would group most of the different business development companies. And it showed me more or less what I would expect to see. Main was standing out as one of an outlier. Similar to that was Gain, Capital Southwest, Hercules Capital, ARCC. So these are good companies, Glad, OCS. And so these are companies that are in BDC, companies that I would say are all similar and comparable, good quality, reputable, logical companies to invest in. But also out here, I noticed FDUS. Now this is not one that I'd come across already before, but it was in this sort of cluster of what I'd call qualitatively interesting business development companies. It's out on this edge. It's not right next to Main or ACC, but in this region. So it's something like Ares Capital, something like Main, and it's interesting. So what this PCA visualization has done is it's really just pulled all of the data and mapped it out in these two dimensions. And so if I've got a fix on what a good company is, I can tell there's other good companies around it. So Main, Ares Capital, etc. This is a good zone to be in, and these are probably the companies I'd probably start to avoid over here. As I looked at the returns, I wanted to look at the leverage, and I wanted to look at the 3-year NAV return. Now, this is interesting as well because I like to see that NAV growth, the net asset value growth over time. So I want to see a positive return, and as we can see down here, there's a number of BDCs with marginal or shrinking NAVs over time. But I also wanted to see, was there any relationship, say, between higher leverage and more net asset value growth or not? And amusingly, I thought there wasn't. I thought there would be a sort of a straight line roughly like this. And I don't think that's the case. Almost if anything, it seems to be, again, the good companies up here seem to be running at lower levels of leverage and seem to be securing higher levels of net asset value return. And then there's some other companies down here which seem to have more leverage and much lower levels of net asset return. So again, what I'm looking for here is I'm looking for my key companies that I'm qualitatively happy with, like Main and Ares Capital and Hercules Capital there, for example, as well. Gain, Capital Southwest. And again, out here, once more, I found FDUS, Fidus. And so that's interesting. So it's quite low leverage and also quite a high 3-year NAV return. Now, again, I'm not too worried about the quality of the data here. That again, it was just a rough look to see what was going on and to see whether or not there was any interesting opportunities open to me and maybe something I'd missed. And it turns out I was actually really interested in FDUS. Is it a good choice and is it the right choice for everybody? I don't know. But I'll explain why I've swapped my Main Street Capital for Fidus. And you'll see here as well this 3-year NAV return. It gives me a boost, very little change in leverage. And again, if I'm looking at the principal component analysis chart as well, we'll see that again, it's in the same sector. It's in the sort of the safe, good, qualitatively nice, good to own BDC quadrant here. Okay, coming into Koifin, looking at my BDC Watchlist review here. And I've got a couple of important points to look at here. I've, again, not got all the data here that I want to look at, but there's a couple of key points. Another issue that was concerning me with Main Street Capital here is the level of what I would consider to be overvaluation. Now, it's a good NAV, there's no doubt about it, but the price to book here at 1.7, and I've got a price to NAV estimate here of 160%. And you'll see that the price to NAV estimate is similar to the price to book value. So if you didn't have, I would say, the ability to get a NAV estimate and price to NAV estimates, I would say just use the price to book value Here I've got the last 12 months plotted, and that will give you a good sense of whether or not the BDC is trading at a premium or at a discount, and it's like a closed-end fund in this way. Now, Main at 1.7, Hercules Capital 1.6. There are some very premium Capital Southwest 1.5, and you'll see again the price to NAV is very similar. So there's a couple of these BDCs that are trading at a big premium. Ares Capital, I would say, is a nice one that's not trading at too high a premium. And if I go all the way down here, I can see this. It's trading at about 1 times on a price-to-book ratio, or about 100% on the price-to-NAV estimate, just over, very marginal. Fidus, for me, it's not overvalued. Remember from the other data, it doesn't have too much leverage, and it appeared to have a nice NAV return. Now, that's cool. Now let's look at the total return. Now, the total return over the 10-year period, Fidus doesn't have one, but again, we'll see over a 10-year period, gain, Hercules, Main Street, Fidus does have a 10-year total return. And so it's up here in the top sort of 3 or 4 over 10 years, edging out, in fact, ARCC, Ares Capital, which is returning 222%. Now, the picture changes a little bit when we switch to the total return for over the last 5-year period. Hercules Capital comes out on top, Capital Southwest, and Fidus is coming in here ahead of Main, which has struggled a little bit in terms of total return over the last 5 years. And so I see Fidus here is doing well in total return in both the price returns as well as dividends. Now, the big reason here I think that we're seeing a better or an improved outcome here for Fidus is the relatively high dividend yield. Now, if you compare Fidus here to Main, we've got a better, almost twice as much dividend yield, and that's counting regular as well as special dividends. Now, one of the big differences, though, is we pull open the chart here for Fidus, and we pull open the dividend chart. One distinction that we will see here is the way in which their dividends are lumpy. They're not just going up in an endless increase. And so we see this lumpiness on the dividend. So it's not like a dividend growth machine or a dividend grower like Main is. It is lumpy, and I believe they pay out everything that they earn, and they use the special dividends quite a bit as well as their regular dividends. Now, another important point here as well is Fidus does pay quarterly dividends. For some people, that's going to be a deal breaker. For me, I'm not too worried about quarterly dividends. So where does it leave us? It leaves us, I've swapped essentially my Main Street holdings for Fidus. Now, that's given me a bump in income, but one of the big questions is, what am I paying for here, and have I got good value for money? So one of the first things I want to think about is dividend coverage. Do they have good dividend coverage? Are they earning enough money to continue to pay out these dividends? Now, looking at the chart here, we have orange, we have Main Street Capital, and blue we have Fidus. This is running from about 110% coverage up to about 160% coverage here, and they're both coming in, I think, at a relatively safe at the moment, a relatively safe 30% additional coverage over what they're paying out. So that, in my mind, is good. So when I begin to look at their rating on their overall portfolio quality, most of their portfolio is pretty good in this sort of orange bar here, but we can see the really high rated, the highest quality elements of their portfolio we can see are sort of slipping down a little bit in recent years as more of it sort of shifts to just pretty good. And I've just changed the ranking there, the numeric sort of ranking that they use through to just a 5-point qualitative scale. So what exactly do they hold? And this is where I think things get really interesting. What I think's interesting is the recent shifts here in the blue for Fidus, which is part of their portfolio composition. And blue here is the first lien, or the highest, the first types of loans that if you've got the first lien loan, Fidus is likely to get at least a major part of their assets back if the companies that they're lending to do run into trouble. So the first lien is the safest, second lien is less safe. Now, the second lien loans here as a proportion of their overall portfolio have been decreasing in recent quarters, whereas the first lien loans have been increasing as a relative share. And they've also got some of these subordinated loans as well increasing. So I'd say overall in the last several years, they've been boosting the overall quality of the portfolio composition, and that is definitely something that is good to see. Now, in my mind, one of the major measures of quality as well is non-accruals. Now, I've got here Main Street Capital, and we can see here in terms of the non-accruals, we have here in blue an amortized cost, or in orange here in fair value. Now, you can see here it's been decreasing a little bit in terms of a proportion up until recent data, and we're running at about 2% at amortized cost here. Now, one of the key things I want to do is make sure that Fidus is not, shall we say, worse than this or noticeably worse than this. Now here's Fidus with their non-accruals as well. Again, blue is the amortized cost and orange is the fair value. And we can see here relatively similar sort of proportions heading down towards below 3%, slightly higher than Main Street Capital, but not in my mind terribly. And again, fair value also looking relatively good at this point. So in this case, I can say that I'm switching from Main Street Capital into Fidus. I'm getting a higher dividend yield on the money that I have invested. I'm trading out of the monthly payments from Main Street Capital into the quarterly payments from Fidus, but there doesn't seem to be a major issue here in terms of the non-accruals spiking in recent quarters. And I'm quite happy with the overall portfolio composition, switching more towards first lien, although it is not the safest, and there's some other issues there as well, but it certainly fits for me well within the current risk profile that I have for this type of holding. It boosts my income, and I think this is a really nice entry point as well. So what do you think? Let me know in the comments down below. Have you come across Fidus before? Is this on your watch list? And would you like me to do an even deeper dive into this company and try and help you to explain why I think this makes sense for me and what sort of investor might be most interested in this type of company? Let me know. Looking forward to hearing your thoughts on this.